Sanjay, you know the enterprise software space like nobody else. I was just mentioning the Coupa upgrade, and there's a lot of M&A going on. What does that tell you about how much value there is in this market?
Thank you, John, and good morning, Deidre, too. I'd agree with you. Let me just underscore something you just played from Orlando Bravo. I really respect him. He's a great investor. People need to get the memo that what investors are looking for is profitable growth. There was a lot of craziness the last 2 years. If you're not showing free cash flow and growth together, as opposed to just growth with a distant future to margin expansion, I think you got hit pretty hard. I mean, the NASDAQ was down 15% year to date, and since the highs in November. And even great companies that I respect, like Snowflake and Atlassian, you mentioned Coupa, they're down 50, 60%. But at these beat up prices, I think some of them, I talked about this when I was on your show last time, are category leaders. Coupa does one of the best jobs at procurement. You saw Anaplan being acquired by Thoma Bravo. I think some of these stocks are now at a point where they've bottomed out potentially. And some of them are acquisition candidates like Anaplan, whether it's by other strategic buyers or by PEs. I'm very surprised the PEs are paying this type of multiple, but when they're flush with that cash, there's some good buys out there.
Yeah, and they're not the only ones buying. We've got George Kurian from NetApp coming up later in the show. They just bought Instacluster, focusing in on this multi-cloud trend, and there's still complexity even with cloud, right? And having to manage, databases, multiple different types. Are there opportunities for companies, public companies that have cash that are very specifically focused to beef up in a way that's going to drive their growth over the next couple of years?
Yeah, we had a general rule of thumb when I was been an operator at those two big companies that you could spend maybe 10, 15% of your market cap. So certainly companies like NetApp, I think they're in the 20 billion market cap range, will look at the smaller tuck-in acquisitions. I'd be curious to know if companies like them will look for transformative ones that are bigger in market cap during this time where several of the potential buys are severely depressed. For the bigger companies, and I'm certainly very much long on the Apple, Microsoft, Amazon, Google, because they're going to be a big move to the multi-cloud. I think the key question there is, will they buy the bigger ones? I think the Google acquisition of Mandiant is probably a trial balloon to see how the Department of Justice and Antitrust looks at those. But I think there's some really good buys in security, in SaaS applications. We'll have to see how that plays out. But I think the larger players, this is a good time to be looking at your war chest and not looking at opportunistic buys.
Hey, Sanjay, it's Deirdre. So how important then is that approval or non-approval by the antitrust regulators of that Google Mandiant deal? If that does get approved, do you expect to see a lot more activity among the big tech players because maybe it's an indication that they can?
It depends on where in the stack. I think in the infrastructure layer, compute, storage, networking, those two players, I mean, when you have, it's about $120 billion business collectively between the three of them, growing 40%. You saw the news this week of Boeing splitting out their $1 billion of total contract value across all three. I think they've got most of the pockets. But when you start to go up into the platform layer, you take, for example, the data layer. John, we've talked about this last time. The database data warehousing layer, you've got three companies I see most often: Snowflake, Databricks, and Google BigQuery. Amazon and Microsoft have some holes there. Will they fill it? Will it remains to be seen. You move up to the applications layer. There, really, you've got Office 365 Dynamics of Microsoft and Google Workspace, but Amazon, has a few apps. Will those companies move up into the SaaS space and really broaden their portfolio, not just to infrastructure platform and SaaS? There's lots of opportunities, and these are the companies with the multi-trillion market cap. So it'll be very interesting to see how the M&A landscape plays for the big guys and if they will get through antitrust. Now, the other thing to note is that acquisitions are not easy to digest. I have a lot of scars on my back from having done an M&A, and the track record is 80, 90% of most M&A fails. So you want to approach M&A cautiously.
Okay, that's interesting, Sanjay. That's the big tech side of it. What about the boom that we're seeing in PE buyouts? We asked Orlando Bravo about this yesterday, too. Is there danger that too many companies start doing it now, particularly those that may not have as strong track records in tech? He said that sort of the secular shifts are so strong that as long as you're aligned with management, you have a clear operating plan, these deals can be successful. What do you think? Is it that easy?
Yeah, I mean, in the past, I would have viewed PE deals as the ones where you've got a company that's not doing so well, highly profitable, kind of a little bit of what we saw with Citrix and some of the other ones that went in. But, the acquisition of Anaplan kind of surprised me, but I can tell you that Anaplan's a good company. If you think about financial planning, sales planning, and supply chain planning, it was actually the first problem I tackled almost 15 years ago at SAP in building analytical applications there. This is a big problem. And you take one of those areas like supply chain planning, companies haven't really solved that, today, which is why we have a lot of these challenges in appropriate planning and optimization. So that's an attractive company. Now, they must have a thesis that company can get more profitable and can potentially even grow faster to pay 10 billion plus for that asset, because you'll have to take that out at almost 15 to 20 billion if you're looking to take that public.
Right.
So I was surprised by that, but looking at Anaplan as a very good asset. I think there's going to be many more to come.
Sanjay,
you talked about many of these companies that are in that $1 to $5 billion market cap range. Mandiant was in that range, or 5 to 10. Coupa and Anaplan. There's several others. I think there could be more M&A to happen, whether it's by the strategics or the PE players.